Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So this is a very special period where we maybe do not have a lot of important economical events, but we're coming to a very important political event, which is no doubt will have impact on the economy as well, and very soon. So it makes sense to discuss how markets now behaving in relation to background to the political struggle that stands in the United States. And there are lots of really, well, absolutely crazy issues that we have currently in the performance of the bonds, of the stock market, Forex market. So some most interesting stuff we have discussed in today's weekly report. So also given some hints on what might happen as a result of the elections, not politically, but mostly in relation to the changes in the economy and what really some traps exist on the way of the new president in the nearest few months. The tricky moment also stands that right after the election we will get the Fed meeting, which will be on the 7th of November. And all this stuff together, well, I think that maybe we should not prepare any forecasts right now. It's really have no big sense, and we mostly keep our plan as it exists. And in a way how it is happening right now, I mean mentioning a lot of different frauds that stands in the voting places, and actually it's definitely will be some jitter, and when there jitter stands, then there stands additional demand for United States dollar. So from that standpoint of view, I think that we should not touch our trading plan that we have, I mean long-term view, with the possible drop of the euro below the parity in a few months. So let's keep it as it stands and then see what will happen. In the shorter term, if you take a look at the euro currency, results of the payrolls report seems a bit curious. Just because we've got weak report. Now we will not discuss how it's really correct, but based purely on the numbers, it should be different action, right? So we suggest that it should be more in favor of the rate cut since the job market has become weaker, but we've got the opposite performance. And mostly we have the same performance on 10-year bonds. So if you take a look at the bond, this is dollar index, interior bonds, recall what we mentioned this grabber. And you could see what has happened on Friday. Yield has jumped to 4.4%, breaking the resistance of 4.3. Outstanding performance for 10-year bonds. It means that the weaker interest rate is expected to, the higher the bond yield is coming. So, which should be actually the opposite. With this issue on the background, we have no illusions concerning the euro. So, despite that nominally, we have the bullish trend on the daily, at least based on an MACD, right, that we usually use for a trend direction. But based on the performance, I think that the bulls have nothing actually on the back except the nominal trend. On the daily chart, there are a few moments to mention. First is we have the classical, it's called as a bullish trap performance, when we have the flag. Initially it has been broken up in opposite direction, but then market returns are back down inside, which calls us the bullish trap. And in fact, this is fake flag breakout. This fake breakout is accompanied with the bearish reversal session, which is by itself has bearish sentiment. And finally, returning back to discussion of what the particular pattern we could get here, with based on the thrust. Initially we talked about possible bread and butter sell, but we consider price hasn't reached the 30% resistance. It means that all the stuff is coming to idea of the double repo buy. But let's keep the word buy aside. Whether it's double repo will be formed or not, we will see. As I said on Friday, personally, I do not like the COP and completed COP around 107, and the same COP on the dollar index around 105 level. But here we could say with a high degree of certainty that euro will try to challenge the lows. Whether this will be double repo or it might be different pattern or market will just break it down and just keep going lower, we do not know. But the fact that euro currency based on this performance should try to test these lows, and that for the Monday we have the bearish context. But unfortunately, this context mostly stands only for intraday trading, because as I said, on the daily chart we have nominally bullish trend, and traders who trade currently on a daily basis probably should wait and see what will happen. If you trade on a daily, weekly basis, so when you use the weekly trend for direction, it also stands bearish, and from that standpoint of view, you could fade daily trend direction against existence fib resistance when you have bearish signs and trying to take longer term bearish position. If of course you would like to keep it through all the stuff around elections and so on. So this is a separate question, this is up to you. But technically it looks as I just discussed. So on lower time frame, you could see that our XOP target has been perfectly completed, and in a way as we have discussed. If you remember, I said that, well guys, whatever payrolls will be, probably it will be a lot of volatility, and on some occasional spike, two really good chances that we could get 109. And indeed that has happened. So XOP is done, market is turning down, trend has turned bearish. So here we have intraday bearish context. On the hourly chart, it's the same story. We have sharp reversal, butterfly. It also has been perfectly completed, you could see, with the same spike. And now market is coming to the two supports. So if you still have some reasons to buy, although I don't know what particular they could be, that's two levels to watch for. Is 108.30, is 108.10, 108.15 approximately. It's also, you can see they are actually agreed with the ultimate butterfly target. So how we estimate the target of the butterfly? We use this whole swing of the butterfly as extension and counted 127 and 1618 ratios to the downside. This calls as ultimate targets, because minimum target of the butterfly is just 30% retracement. But since it already dropped below the lows forming reversal swing, this first one is already completed. This first point to watch for next one will be here. For others who would like to take the short position, for Monday, we could just keep watching for a bounce, since this is more or less strong support. Retracement back to the 108.60 area seems not actually bad, or maybe it will be slightly higher, somewhere between 108.60 to 108.76. Also take a look at kind of the maybe hand and shoulders might be forming here as bounce will happen, so it might be shoulder, head, another shoulder. So just watching for the pullback. So if you like to take the short position, you need to consider pullback to some of the levels from this downside swing. It's very simple. So that's the things that we intend to keep an eye on Monday.